Hey, good afternoon, everybody. Thanks for joining us. I'm with Dr. Mark Charest. Doctor, that is a beautiful view over your shoulder. Thank you for sharing that from the frozen tundra out here in Nebraska.
The
It
beach
looks
day in
nice.
February, you know where to find it down here in San Juan.
That is right. Well, we have to have a conversation here. The JP Morgan Healthcare Conference is over. We saw a little bit of activity, but it seems like the start to the year, the theme is developmental stage companies are not in the crosshairs, but they're being acquired. Right? We saw a couple of deals happen, and these are mid-stage companies that they're pre-pivotal studies. Like, what's going on? Why the appetite for these development stage companies by the big boys? Why is these type of firms on the radar?
Well, it's definitely nice to see, Jonathan. And so far in 2024, the three larger M&A deals we've seen have all been kind of mid-development clinical stage companies that have been acquired. Hiprex was one more recently by Sanofi. And then at the JP Morgan conference that Monday, Merck announced the acquisition of Harpoon, and J&J announced the acquisition of Ambrx. And the theme really has been the big boys are looking for differentiated assets, or in this case, products that have the promise to be differentiated,
Mhm.
because these mid-stage companies, they haven't announced pivotal clinical data yet, and there's quite a bit of work for them to do. Yet the acquirer felt compelled, and perhaps there was a competitive process in some of these. We'll see more when the proxy materials come out. But I think it's just reinforcing the theme of there is strong demand for differentiated, innovative therapeutics companies.
Well, let's talk about one, the CERE Therapeutics equity ticker CER, $8.7 billion acquisition. You've said that we're not going to see them make money until 2030. But even then, along the line, we're talking hundreds of millions of annual investment to get there along the way. What are they seeing? Like, what need is this drug fulfilling for them? And is it that interesting of a solution to a problem?
Yeah, Jonathan, Cerevel was interesting. CERE is the ticker there. That was one right at the end of last year, so a late 2023 kind of deal. And they're developing a new mechanism, that's going to be used in various CNS diseases. And AbbVie, the acquirer, clearly has strategic motivations. AbbVie has a CNS franchise that their lead drug is facing generic competition, and it's going to be off patent in that kind of 2030 timeframe, right about
Mhm.
when the Cerevel assets would be ramping, assuming that they get them over the goal line successfully. So it's an interesting one, because it's a pretty high price tag. Typically you wouldn't see a 7, 8, 9 billion dollar acquisition, pre-pivotal data. But AbbVie was compelled, again, because they have this existing CNS franchise that is going to be facing generic competition. And also, I think they were probably thinking about FTC concerns. In
Mhm.
some ways, acquiring assets a little earlier, Jonathan, is probably going to attract less scrutiny, because at this point in time, it's not clear that these assets really will become a drug or not.
Mhm.
And so when you're in that kind of fog of war stage of developing a drug, regulators might be perhaps a little less scrupulous of trying to shut it down.
Yeah, well, that brings to mind another acquisition we saw by Bristol Myers, seemingly a big pocket, deep pocket one, $14 billion, was Karuna Therapeutics, KRTX, talking about schizophrenia and I got to put this here, it's an antipsychotic drug. How's that fit into Bristol Myers portfolio? Because that stock, Bristol, has been performing really well, mostly as a result of this obesity drug. So what need is that fulfilling here?
Yeah, no, Bristol's actually in a tough spot, Jonathan. So a lot of their, major drug franchises are facing generic competition. They just lost Revlimid, that was acquired from Celgene, and they have a couple other things that are kind of going away. So they're actually, they're they need to acquire, and bring in some assets. So Karuna, interestingly enough, has the same mechanism as Cerevel. All right, so
Mm.
these would be the first two compounds of this mechanism proofs. But Karuna is a little further ahead, so they actually have the phase 3 pivotal data out, whereas
Mm.
Cerevel has yet to report that data. And so it's a little further ahead, and I think that's a little more de-risked. And I think Bristol Myers is looking at it as, gee, they also have a CNS franchise. They've had multiple blockbuster assets over the years in that space. And I think they, also want to leverage their strategic footprint there. And they need to bring in new products, just kind of given where they are from a growth outlook perspective. So again, a highly strategic deal with, and the themes for these are, if you have a first or best in class type profile, that can get a lot of strategic interest.
Yeah. Well, let's change gear then. Like a lot of, well, from my perspective, where I usually sit, something like secondary market or follow on investing, not typically something you'd find in an ETF per se or an open end mutual fund. It's a little more esoteric, a little bit more skill set involved following these. But I've heard you say we're at a record breaking $4.5 billion in follow on money has been raised this month alone, just in January. Where's that money coming from? Where's it going? And why do you think this is such a, I don't know, hot spot or record breaking part of the market right now?
Yeah, look, it's a high level of activity. That's toward the upper end of what you typically see in January. And usually after the JP Morgan conference, companies will come to market, with follow-on, raises. Typically, depending on the year, you'll kind of see a feast or a famine, right? You'll either see, $4 or $5 billion raised in January or much less than that. This year it's the former, and I think it speaks to the interest of investors to put capital to work in the sector, the interest of investors to really capitalize companies well so that they can unambiguously get through clinical development milestones, but also it gives them leverage in negotiating potential M&A transactions.
Mm,
I think a lot of what fuels some of the M&A is the fact that these companies are fully resourced to go it alone, and they have a standalone path,
mm,
which gives them leverage in potential M&A negotiations. So an interesting thing to look at is, if you look at the cash balances of the companies that are acquired, they're typically not running on fumes, right? They're
right.
typically pretty well capitalized, and again, that gives them leverage. So I think that this bodes well, right? Because
Good.
we're coming out of a very difficult period for the sector, right? Without the rally, before the rally starting in November at the end of last year, we were at the index sitting here down 20% for the third year in a row, which
Right.
is an index that's never been down 2 years in a row, let alone 20%, 2 years in a row, let alone 20%, three, and that's where we were the end of October.
Mm,
And I think that the move off the bottom is really giving folks the confidence to, really look at recapitalizing companies, putting money to work, and, hopefully capturing a nice leg higher as we go through the rest of the year.
yeah. Well, my takeaway from you is the story of the day or the theme is development stage companies is kind of where the action's going to be. So are we at a point in the market? Is the setup for this year positive, optimistic, cautious, negative? Where is your mindset in terms of where the setup is or the direction we're going?
So definitely there was enthusiasm at the JP Morgan conference, and I think
Oh,
we,
good.
we share that view for the year. We think that, again, the setup coming off of, what really has been, a very difficult 3-year period of drawdown and consolidation in biotech, right? It's 65% peak to trough drawdown from the February 2021 peak. We've been 13 quarters in this pullback and consolidation range. It's been a tough go, and certainly compared to other areas of the market that seemingly make it record highs every day. Biotech has been in a very difficult nuclear winter type scenario, and we've seen, I think, some thawing, and sentiment has materially improved. And I think there's a pretty high expectation that there's going to be some pretty exciting absolute and relative performance opportunities as we go through the year.
Well, I like hearing optimism and I like hearing your thoughts on it. So that seems like a good place to stop. Mark, this has been one of your best calls. I got to admit, I learned a ton hearing about this, and you got me feeling good about maybe it's time to take a look here. Follow on investing is a key place to be. Don't be necessarily afraid of development stage companies, but be very careful and cautious. And maybe a rising tide will lift all boats, but most likely sounds like we got to be cautious and thoughtful in terms of what we're investing in, if I have that right.
Yeah, there's going to be some great winners, and we're looking to sort of pick those out, and everything that we're seeing is telling us that companies that deliver on the promise of delivering differentiated medicines will be rewarded this year, and we're looking forward to seeing some of those play out.
All right, sounds good. Well, hopefully you get some sun on that beach day. There's no sun in Omaha, in case you're wondering. Not a beach day; it's a snow fort day. So have a great weekend, Mark. Thanks everybody for joining us. We'll talk to you again soon and see you on the next Doctor Is In. Remember, third Thursday of the month. Feel free to register or shoot us a note how to get registered. Thanks, Mark. Have a great weekend.
Thanks, Jonathan. Thanks, everybody.
Take care.